Would you like your savings and your net worth to go up in value instead of going down in value? Stupid question, right? Of course you would. We all would. However, talking about what you would like and actually executing it are quite different, because oftentimes we may think a certain way for a long period of time, and changing our thinking, even when presented with facts, becomes difficult. So that's what we're going to discuss today. Every Friday, we go over how you can preserve your wealth. And basically, that means that the dollar is replaced with other assets. Not completely, but I'll show you and walk you through how we do that. First, let me say what I always say. Banks don't care about you. Government doesn't care about you. And true freedom is financial freedom. So it's up to you to take control of your finances. Because if you can transform your finances, you can transform your life. Get rid of the anxiety, get rid of the debt, and start growing your net worth. So this week we talked about a couple different things throughout the week. One was China selling off, as they have been for quite a while, U.S. Treasuries, meaning they're not holding as much U.S. debt, and they're doing that because they don't want to be dependent on the U.S. dollar as much. Does that affect you? Well, of course it does, because just like inflation, it's affecting the value of the dollars. Then we also discussed paying debt versus saving money. And you might want to go back and take a look at that episode, because oftentimes people don't realize, I think there's two different ways to think about it. Sure, you want to get rid of high rate interest debt, but at the same time, you might balance that against saving money. Well, if you're saving money and you're getting a small interest rate and your debt is a high interest rate, well, chances are it might be best to just get rid of that debt, then start saving. However, if we are in a recession or you're worried about your income stream for one reason or another, then you might want to balance saving some money just to make sure you have an emergency savings. And that's part of what we talk about. So let's dive into this week. And I've been doing this since February, even though I've been diversifying my portfolio for a long time. Here it is in 10 seconds. You have a chunk of cash savings, and that's for, let's say, 3 months or 6 months or however long you feel comfortable keeping cash to make sure that if you lose income or you have expenses, whatever they may be, come out of nowhere, you can pay for them. But once you start growing your savings to a certain size, and I'm not talking about retirement money or your investment money, just that cash that you may have lying around, there are other things you can do, because it's been proven, and I've shown this before, that over the last 100 years, the dollar has lost 99% of its value. It's a hard thing for people to understand. It's hard to understand because if you have $100 in the bank, a couple of years from now you have 100 or 105 in the bank, you're thinking, well, I still have that. It hasn't lost value. Well, it has. Because as you know, and this has been exacerbated over the last couple of years, it's been very obvious, and in a way, inflation took off so high, it almost woke everyone up to the fact that, wow, I was able to buy whatever it is, eggs at $2 a dozen, and now it's costing me $4 a dozen. Or I was able to buy a new car at 30 grand, and now they're 60 grand. Or I was able to buy a house in this neighborhood for 300, and now they're 600. That means that it doesn't matter how many dollars you have, you can't buy the same amount of stuff. So what do? What you do is what the rich have been doing for a long time, and that's assets. They turn those dollars into other things. Forget for the moment things like real estate and whatnot. We're just talking about that savings portion. You can turn it into gold. You can turn it into silver. You can turn it into crypto, things that over time hold their value. That's why you've probably heard people say that gold is a hedge against inflation. What do they mean? What they mean is when there's inflation, and there is now, it looks like it's been 3.5% every month, that your dollar loses value. But if you took your dollars and you bought gold, when the dollar is going down, your gold may be going up. And that's what we're going to show you here. We've been tracking this since February to prove this point. So let's take a look at all of these. Before we do, I'm going to throw up these two shows that I put up recently, episodes I should say, showing how to very easily use ETFs to buy gold and silver, and how to very easily use ETFs to buy different types of crypto. To buy crypto, at least such as Bitcoin at the moment, Ethereum's coming next. To make it simple to diversify just by logging into your broker and buying one of these ETF funds. All right, let's look at the stats this week. Compared to last week, I always look at savings, CDs, and Treasury. I consider those to just be cash. In other words, you take your cash and you might buy a CD and get a higher percentage rate. Look at the savings rate here. It's around 0.5%. But if a CD is sitting at a couple percent, well, you could move the money into a CD, lock it up for a couple months, maybe rotate it every month. Same thing with a Treasury, and the Treasury is buying U.S. debt. But that's just rotating cash, and you're barely keeping up with inflation. And those numbers stay the same because the source I use, it's a government source I use, and they change it every month. Now, let's look at gold. If you had bought some gold, we've got silver here, we've got Bitcoin, and we have Ethereum, the two largest cryptos available, but of course there's others. So gold this week is $23.21. Last week it was $23.41. It's been down slightly. But if you compare it to February, you see on this chart when we started, that was just over $2,000. Silver's down compared to last week. It's $29.58. But compared to February when we started buying, it was $22.88. Bitcoin is up since last week. Last week it was around 67,000. Now it's 70,943. Since February, that's almost doubled. You can see here Ethereum back in February was $22.99. Now it's 3,800, up a little bit over last week. Then as we move down, we've got inflation and Treasuries. But first, let's talk about those commodities. As you can see, the savings, CD, and Treasury rates are just around inflation, barely beating it, if beating it at all. But if you had moved some of your savings money into other assets, those assets have been growing steadily since February. And that's the idea. Of course, things are cyclical. But over a long period of time, if you don't need that money right away, you could use other assets. Look at inflation, around 3.4, and then the 10-year Treasury, and I'm adding the 2-year Treasury for a reason. The 10-year Treasury is 4.413%. That means you buy a 10-year Treasury, that's the rate you'll get. The 2-year Treasury is 4.853, as you see here. Why do I point that out? You should notice that the 2-year is 4.8, and that's higher than 4.413. What does that mean? That is called an inversion. Think about going to the bank, and you get a CD for 3 months, and they say it's 3%, and then they say here's a year, and it's typically more, maybe 3.5% or 4%. If you're willing to let them hold the money for a longer period of time, they're going to give you a higher rate. That's what we're all used to. That's not what's happening now. It's inverted, meaning the longer you hold the money, they're going to give you less. The rate goes down. That makes no sense. It's been inverted for quite a while now. Every single time the 10-year and the 2-year Treasury are inverted, we've either been in or are going into a recession. And that means, like we're seeing now, that inflation is higher, that unemployment is higher, and we're seeing GDP go down, which is how we measure the production of the United States in goods and services. So we've got less jobs, we've got more expensive stuff, and the nation as a whole is getting, as I like to say, lazier. That can't be good. It's called stagflation. So go back and watch the videos. I've got multiple ones, but a recent one talking about savings for emergency funds versus paying off debt, and it also references some past videos about emergency savings, and I'll put those in the description down below. So thanks for watching. Keep your eye on the economy. Watch the show every week. I've got episodes throughout the week, and every Friday we go over this basket of goods, and maybe at one point in time you'll say, I get it. Some of my long-term money should be assets. I've got a past episode where I talked about and showed that the top 1% of the U.S., most of their wealth is in assets. And when we have inflation, what happens? Things get more expensive, which means assets go up in value. So be careful holding on to all those dollars. Make sure you're doing it for the right reason. Take care. Have a great day. Thank you for watching.